Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views. Hey, good morning. Sorry, I gotta pull up my notes. So happy, what is today, Thursday. Raiders and Rams play tonight. I don't know how many of you are on the bandwagon of the greatest football team of all time, the Las Vegas Raiders, but that's our team. They're terrible, but on a recent surge. Anyway, I want to talk about a couple things. I actually have something important to talk about too. Sienna. You guys see this quarter, 61 cents versus 7 cents expected, 971 million in revs versus 848 expected. Looking to deliver, in their words, outsized revenue growth in 2023. Now, is there any reason, if you're a management team, to use a word like outsized in the current environment if you weren't really confident of your ability to deliver such a lofty expectation? I thought it was pretty remarkable to use that kind of language. Stocks trading at 31 times forward earnings, 1.8 times forward sales. Pretty cheap on the sales metric. The PE, I mean, if their profitability really is, the 61 cents versus 7 expected, if that's reflective of what they can deliver going forward, then obviously those multiples are way too high. They're going to have to come in because their earnings expectation is going to go up quite a bit. I don't know. I haven't done the work, but I'm just looking at that and just seeing that, and you can see it on the chart for those of you that are looking on video. This is Sienna, just gotten the crap kicked out of it. It's going to open up around over $50, which is going to be a nice gap up, actually right around the 200-day. These guys aren't the only ones. I mean, we've seen little subtle signs around the marketplace. We had Mongo come out yesterday, right? Great number, gap up, stock traded down relative to the gap up, which I figured it would. That's a little more expensive story, also faster growing story. But we're seeing these subtle little signs across the market of companies doing a little bit better than feared. If you look at something like a Honeywell, I mean, this thing has gone off to the races. I've got kind of a downtrend line that I drew in there a while ago, but way above that, way above the 200-day. I mean, you look at this thing, you think no way there's going to be a sign of any chance of recession going into 23. Look at Emerson. Emerson's another little, obviously a different business, more project based, but we could draw the same kind of downtrend line here, confidently broken above that and broken above the 200-day. You got the 50-day coming up through the 200-day on Emerson. Looks very constructive, right? Cyclicals. These are cyclicals. They're part of the XLI. Sorry about that mess. But again, 200-day, trading confidently above that 200-day. Another highly cyclical group is doing well too. And this one has continued to confound me. The semis, SMH. I drew sort of a channel here, a down channel from the peak. I don't know why that's kind of off floating in space there, but either way, looks like we're, above trend, that channel, consolidating below the 200-day as well. You look at individual issues, and I've talked before about semiconductors in terms of having a preference for semi-capital equipment, CHIPS Act, what have you, things like that, I think can provide sort of a platform to carry them through the next up cycle, really provide an ability to cushion earnings. You look at AMAT, that's trading right above the 200-day. I think, I don't know, one of the sell sides came out yesterday and expressed preference for Applied Materials. Lam Research right around there, ASML, the Monopoly, doing quite well. I mean, maybe the message here, I'm not trying to recommend all these stocks by any means, but maybe the message here is there's something a little bit stronger under the surface that no one's really talking about. If you have these cyclicals that are starting to rebound, either they're right and we have a little bit stronger environment going forward than anybody's really thinking about, or they're going to come right back to earth in pretty short order because it's just a giant false start across the board. But then you see things like Sienna, and from what they're saying, I mean, maybe there's something to it. And Honeywell, when they reported, they said they're looking for large acquisitions. That's offense. I don't know, something to think about. Yesterday, we bought some FANG, F-A-N-G. This is a premier exploration and production company. As you all know, oil's gotten another area it's gotten the crap kicked out of it. Oil and natural gas. Maybe oil and natural gas are trying to bottom here. I don't know. But if we talk about the subtle strength we're seeing across some other sectors like the industrials and semis, we look at companies like Sienna. Maybe there's something a little bit more constructive happening. This thing I kind of couldn't help myself. It traded really right down to this 200-day moving average from just 3 weeks ago, maybe a month ago, sniffing 170. Here it is now at 136. So we bought some. We'll see how that goes. But yeah, so that's the message. Maybe there's something a little bit more constructive here. We'll talk more about this going forward, if in fact this looks to be the case. PPI comes out tomorrow. That'll be very important to what we do. Good luck out there. Subscribe to the videos, subscribe on YouTube, and we'll talk to you mañana.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.